Well, for more on the turmoil in Europe, I'm joined now by Jan Randolph. He's the head of IHS Global Insight Sovereign Risk Group, and he joins us now from London. Jan, thank you for joining us. Let me ask you right off the bat, do you think David Blanchflower's reaction there is too strong or overdone, or do you think it's right on the money?
Well, I think he's makes some important points. The muddling through process, basically what the Europeans are trying to do, when they can agree, that is. We're talking about the ECB, the politicians, the policymakers. They're not always in agreement, and that's partly the problem. They're trying to basically hold off on the big decisions until 2013. Keep Greece afloat, Ireland afloat, Portugal afloat until 2013. In 2013, you've got the big bell ringing. That's when the ESM comes in. It is also a sovereign debt restructuring mechanism. Legally, these European governments can actually force haircuts at that stage. And by that time, the Europeans think that perhaps the economy is stronger, the banking system is stronger to take these kinds of hits. So basically, it's all about trying to keep these three economies afloat until 2013.
So for another year and a half. Well, let me ask you this. We were talking just a moment ago about President Obama. We had a live shot there of him addressing a large group in Dublin, Ireland, where he arrived this morning. Anything that's coming out of his visit there that you're paying attention to?
Well, Ireland is a long-standing friend and ally in severe trouble at the moment, and is involved in a bailout with very stiff conditions by the IMF and Brussels and Berlin. Ireland wants to see a lightening of those terms and perhaps even a sharing of the burden ultimately with creditors. It may want to get the support of the Americans here. On Obama's side, obviously he wants to be debriefed on what the Europeans are doing in terms of the sovereign debt crisis, but I think he's also there asking the Europeans what they can do to stabilize North Africa, Egypt in particular, that region, using their development banks, the European Development Bank. That's also will be on the agenda, I think.
Well, are they in any position to really help that much in the North African region? Just because when you take a look at what the market is pricing in terms of restructuring for these countries, it's quite high. I was looking at some of the numbers that you had produced. The market is pricing in a probability of 85% of a restructuring of Greece at the moment. So are they in any position, I mean, I'm speaking about Greece, not Ireland necessarily, but are any of these countries in a position to really take a stand right now globally?
Well, yes. I mean, the markets are pricing in the high level of restructuring, high probability of restructuring for Greece, 85%, 65% for Portugal, 55% for Ireland, lower 30% for Spain. But whether it will happen or not is really up to the Eurozone policymakers. They can, if they want, keep these three countries afloat right until 2013. It's how they do it, when they do it, is very much in their hands. I think what they'll probably come down to agreeing is that they'll kick the issues further up the road and make the big decisions after 2013 when we had this sovereign debt restructuring mechanism in play.
Is there any catalyst that forces them to make that decision sooner?
Well, in a sense, these market pressures, these market readings aren't as critical. It's not as if these countries are dependent on debt auctions in the market. They've been taken out of that refinancing route and been given a bailout, which is a safe harbor, to be refinanced. But the point is, at the end of the day, no government, not even the IMF, wants to refinance another sovereign indefinitely. It's just not on. At some point, these economies, these countries have to return to the markets for refinancing. The question is how you actually shape and reform these economies to do so.
Yeah, let me ask you one last question here. Back in January of this year, you were on Bloomberg television. At that time, you said you saw a 1 in 6 chance of a Eurozone fracture. Has that changed at all? Do you see greater probability of that happening now?
I see somewhat greater probability. There's basically two triggers here for a breakaway. The first candidate, I think we've got Greece. Further down, possibly Ireland and Portugal. The two triggers are political, either in the austerity countries or, more importantly, political pressures in the creditor countries like Germany, Finland, Holland. They basically had enough. They don't like this idea of this transfer union emerging. We've got to see the political pressures emerge, though, within Spain, Portugal, Ireland and Greece to happen. And we're not seeing that yet. But there is a slightly, we are seeing a lot of rumblings of dislike about what's going on, basically.
All right, Jan, thank you so much for joining us today. That was Jan Randolph, head of sovereign risk at IHS Global Insight, taking a look at the euro situation, keeping us up to date there. Well,